Hello guys, welcome to another video. I have not been consistent on the uploads, but I'm back again at it and we'll try to stay consistent. I'm going to be breaking down a sell trade I took on Jump 75 index some days ago. I got in on the trade 21st, scaling on the second position on the 24th, and I held both positions till TP was hit yesterday, the 26th, securing a total of 1 to 13 RR from both positions. Well, I actually did share this in my free Telegram channel with the group where I posted the chart markup as well as the signal was shared freely with the channel when I got in on both sell trades. So as you can see, we had the first position on the 26th for a sell Jump 75 index. Then we had the second position on the 24th. Yeah, we had the second position, as you can see, on the 24th. We had the second position. Both TPs were hit. Without wasting much time, let me dive quickly into the analysis. So like you know, I'm a swing trader and I capitalize on bigger moves in the market, patiently waiting to take advantage of trading opportunities that gives me bigger moves. If you've been following me for the longest period of time, you know very well I like to do a top-down analysis, starting from the higher time frames, and then I work my way all the way down to get my entries on the smaller time frame. Very well, what I noticed on Jump 75 index from the monthly and the weekly time frames. Monthly was bearish and the weekly time frame was also bearish. Well, this will not allow me go as far as the weekly time frame, but if you switch to your MetaTrader, you can very well see for yourself that the monthly and the weekly time frame for Jump 75 index very obviously bearish. I'll start from the daily time frame. Yeah, so like I said, the monthly time frame was very bearish, and then the weekly time frame was also very bearish. So safe to say, I very much was looking out for potential sell opportunities in line with bigger time frame bias. And what I noticed from the daily time frame was at the time price was coming back to retest. Price was coming back to retest this previous level where it found support somewhere around here, and then price was coming back also to retest the level. And also I'd very much noticed there was a psychological level. Here, 18,200. And yeah, so psychological level. Previously, daily time frame very clearly in a downtrend. So weekly time frame is bearish. The monthly time frame is bearish, and also the daily time frame clearly bearish. This being the previous swing high. So as long as price does not break above the swing high, we are still very much what in a bearish sentiment from the daily time frame perspective. So all we did was we had price come and make what 100% retracement of the previous swing high. And then we noticed some form of reactions upon price getting backwards this level. We noticed what we came into the level, and then we had a nice pin bar signifying that what the bullish move is most likely ending. But then I wasn't okay with selling off this shooting star. I needed some form of confluences added to this. And then if you would notice very well, the only indicator I have on my chart is the exponential moving average 50, like you can see. All I use this for is build up my confluences. In this case, the exponential moving average 50 is acting as a dynamic resistance. So previously we had this level being a resistance. You can see when price came in here, you can see how we bounced off from the level previously. So it's a strong level. Price is coming back a second time. Not only are we seeing what a psychological level, 18,200, also seeing price reacting off the 50 exponential moving average, also acting as what? It's a dynamic resistance. So you can see how the confluences are stacking up already. We have previously the zone is acting as a resistance. Also, coupled with the fact that what the exponential moving average 50 is also what preventing what price from getting past its level. And then what we noticed was what we had a double top. The first time price came into the level, you can see how price reacted off of the level, and then we came back to retest the level again. The second time, then if you know very well your chart patterns, your reversal chart patterns, you know the double top pattern signifies what a reversal in the market. And once this starts playing out what in the bigger time frames, the probabilities of this going out, turning out very well as expected is usually very high. This moves me down to the 1 hour time frame from where we had our entry. Yeah, so we had our entry the 1 hour time frame. So you can see the very level here where price came the first time, and then we had what? The first reaction off of the level, and then we had what? A second time price was also retesting a second time. What I quickly noticed was on the second retest, we clearly see price that gave us a head and shoulder pattern, which is also what a reversal chart pattern. Clearly from the 1 hour time frame, we had our entry during the formation of the second shoulder, which was the right shoulder. So we had the left shoulder, we had the head, and then the right shoulder. And our entry was at the bearish engulfing. After this move, and then the next bearish engulfing candlestick was where we had our entry. Stop losses were above the zone. And my TP for this was moving back to daily time frame. So yeah, very much what I expected was a price to come back to the 100% retracement, and my TP was somewhere around 13,300. So was where I had my TP on this. On 9 1 to 6.9. RR. And then I actually did scaling a second position. What I noticed from the daily time frame was the fact that somewhere around 16,600 was also a level to look out for. So you can see from the daily time frame, previously the level acted as what? As a daily support. And then we broke the level. And you can see our price came. And we can see lots of what? Lots of reactions, lots of candlesticks, rejections off of this level, signifying that what? The level is what? Is a potent level to look out for what? Reaction. I very well wanted what? To see our price what? Reacted off upon reaching this level, knowing fully well what? This level might what? Reject price from getting past. So what we did was moving down to the 4 hour time frame. So somewhere around there was where we had our second entry. And see how the level is looking what? Very clean from the 4 hour time frame perspective. What is support, support, broken, support, support, support again. And then when price came here, we had what? Price reacted a little bit off of the level and then what? Broke past the level. This was a point where I was now looking for what? That entry to then short price all the way to the downside. What I waited to see was what? Break the level and then what? A broken support becomes what? A new resistance. So I was very much waiting for price to come back and then what? Retest the level, coupled with the fact that what? This was what? A psychological level, 16,600. I was very much waiting for price to come back and then retest the level. And then also the entry was taken from the 1 hour time frame upon the retest of that level. So this is the level. So we broke past the level and then what? We came back to the level again. What then do we notice? Not only are we seeing what the price is retesting the psychological level, previous support broken becomes a new resistance. We're seeing price also retesting what? The 50 exponential moving average, which is in this case acting as what? A dynamic resistance also. So we had a fake out of the level. We had a fake out of the 50 exponential moving average. And then we quickly what? Broke back to close beneath the 50 exponential moving average. And that was what we had our second entry on this. At the bearish engulfing, so we can see our price reacted off level, the bearish engulfing. Then we had the second position, bringing price back all the way to the downside. So this is why we took the sell trade on jump 75 index, scaling in on what? 2 positions. Actually, because we understood what? The flow of the market, we understood what the bigger time frames were actually telling us what the market was very much headed to the downside. And what we needed to do was what? Capitalize off the bigger movements and then look for what? Entry confirmations from the smaller time frames to then short price all the way to the downside. And there's a quick trade that played out for 5 days, securing a total of 1 to 13 on just 75 index alone. Do well to smash the like button, leave a comment if you find this very informative, as well as subscribe to be alerted for subsequent chart breakdowns like this. Stay safe, guys.